here is exactly how I set up my corporation and myself personally to minimize my taxes and get paying near 0% in taxes. Now, I'm gonna be honest with you. If you have a physical business in Canada, like a restaurant or a shoe shop, then that is not gonna work for you. But if you are a content creator, a YouTuber, if you run a digital products or service-based business like I do, like a marketing agency or a bookkeeping service, then this tax optimization strategy absolutely works for you. And the best part is that you do not need to be a US citizen. You can be a Canadian resident and citizen and still maximize your tax. And by maximize, I mean paying 0% tax. I only know this because of the mistakes that I've made in the past. Because you see, when I started out, I'm like, hey, I am a Canadian citizen. Therefore, I must own a Canadian corporation. Oh boy, is that the biggest mistake I have probably ever made. Because here's the thing, when you create a Canadian corporation and you now then, buy and sell goods with a customer, you now have to collect and pay GST, HST, which seems okay on the surface. But that is now, anywhere between, let's call it 5 to 13% tax that you have to collect and then send to the government. It also reduces just the amount of cash flow that your customers have to spend with you and that you have to spend within your own business, because you also have to pay for this when you pay for services too. So customers and vendors, you now have to pay and remit this tax, which honestly, it's a bit of a pain in the ass. And I have never met an entrepreneur who has successfully, in their first 3 years, done this correct. Myself included, I ended up getting hit with a whopping $20,000 bill after 2 years of being in business because we were not filing and paying this properly. So that was a huge mistake. After that, you think, well, I'm gonna pay myself money. Maybe I'm okay with paying the GST, HST, but I personally need to make money. And what happens when you take money out of your corporation and pay yourself? You have two options. You can basically take it as T4 salary, or you can take it as a dividend. Now, most people right off the bat say, well, I don't want to take it as T4 salary because T4 salary means I personally, on my annual personal tax return, have to pay, roughly 30 to, let's call it like 47% tax on that money. So I'm losing almost half the money to the government. So that really, really hurts people. And so, most entrepreneurs, myself included, then say, well, if T4 is not an option because I want to keep more of the money that I'm going out there and getting, you eat what you kill as an entrepreneur, you then say, well, I'm going to pay myself dividends. And that's going to be way better, right? Obviously, dividends are taxed way less personally, which is good. It's somewhere between 6 to 15% tax on dividends, which is way better. And it is an eligible Canadian dividend. So you are eligible for the lower tax rate. So that looks very appealing, right? You're like, I can cut my tax bill like more than in half by just paying myself dividends. But here's what you don't know, is you don't know that in order to pay yourself a dividend, your corporation then must show a profit if you want this path. Because a dividend essentially what it is it's a distribution of profits. That's the only legal way you are allowed to pay yourself a dividend. And if you lose money in your corporation, or if you show a zero return because you want to not pay corporate tax, then you are not eligible to pay yourself a dividend, and you will be hit with a lot more fees, a lot more penalties, and a lot more taxes because you essentially didn't have a profit. So how could you possibly pay yourself dividends? So in order to pay yourself dividends, you have to show a profit. That profit is taxed. Again, you have to pay corporate income tax now on your profit, and that is taxed federally. It's roughly between 5 to 15%, depending on your situation. And provincially, roughly, let's say 3 to roughly 15%, again, depending on where you have physically located in your province. So right off the bat, you now have to show a profit, and you're paying, combine these two, almost 30% in corporate tax now on your profits before you send yourself a dividend, where you then get taxed again at that 6 to 15% rate. And so it ends up being roughly the same amount of tax that you're gonna have to pay no matter what strategy you take, paying yourself a dividend or T4 income. And that's essentially your options. That's your options in a nutshell. But here's what you're missing, is that you, as a Canadian citizen, do not need to own a Canadian corporation. And this is the reason why very successful entrepreneurs like Kevin O'Leary and all the people you see on Shark Tank, and even big founders in Canada like the Shopify CEO, have alluded to moving to the US. This is why all of the Canadian successful startups, tech entrepreneurs, and just honestly digital entrepreneurs do not own Canadian corporations. And that's because of this. So this is you as a Canadian, again, owning a US LLC that is preferably located in Delaware or Wyoming, because then you do not pay any sort of taxes on your corporate profits. So right off the bat, your corporation here gets 0% tax. So you get a 0% tax, corporate tax, which is awesome, right? That's why so many businesses will relocate to these popular states like Delaware and Wyoming. On top of that, you are legally allowed as a Canadian to own a US corporation. That's why you can own shares in Apple. So you can own all this. The benefit of this too is because you are a foreign owner and you're the sole owner of your LLC, whenever you are transacting with a customer, you do not need to collect any sort of HST or GST, because we have a free trade agreement in between Canada and the US, particularly with services. Now, mind you, this changes depending on what you're selling, how you're moving physical products, but for the most part, consulting services, content creators, digital entrepreneurs, you're gonna be paying zero tax. You don't need to charge or pay GST, HST tax as a corporation. So that's a benefit there. You no longer have to do this like sales tax filing because the sales tax in these states is zero for you as a corporation, because you are a foreign owner, whether you're Canadian or another company as well. On top of that, if you service Canadian customers, they're really happy because as a US LLC, they do not get charged an extra 5 to 13% on top of whatever their bill is. So it makes your customers really, really happy. I'll draw a little happy face there. So you have happy customers. And now you're left with a situation where you're like, okay, cool, I get access to all of these great, banking products. And you also, if you charge US customers, by the way, I didn't say this either, but US customers, you also do not need to charge sales tax on either because of this specific setup. But then you're left with a problem. You're saying, okay, I can put a lot of discretionary expenses through my corporation and, don't have to take money out of the corporation, but you might still need to take money out of your corporation because, again, this is not an ideal place to store wealth. So I wouldn't want to be investing in this LLC here. You would probably want another place to invest, whether that's personally or with some sort of passive income corporation that's separate than your operating corp. But I won't get into that in this video. This video is really just step one of you stopping paying 50 to 60% of your total income that you make as an entrepreneur to the Canadian government. So we have options here. So option one, if you pay yourself as a salaried employee, that's not gonna work because you then basically have to have a Canadian corporation, which then can pay a Canadian employee. This would be technically like a foreign employee. I'm not really familiar with how a US company hiring one Canadian individual would work tax-wise. So if that's really what you want to do, you can look into it, but I didn't really care about it because that's not the best way. The best way is that you pay yourself a dividend. And the dividend is the distribution of your profits. Now, the good thing is that even US dividends, while that's not technically a Canadian dividend, your dividend payments are taxed way less than what a Canadian T4 salary is going to be. So you're being charged, I forget what it is, but you're going to be roughly 15% tax on dividends from US companies. So you do have to report this on your annual personal CRA return. But I would much rather pay 15% than, 35, 45% of your tax. So you're almost cutting your personal tax bill in half here. Meanwhile, your corporation is basically sitting pretty at 0% tax, which is fantastic. Now, I want to level with you a second. You might be saying to yourself, well, Mark, why has my accountant never brought this up to me? Why has my lawyer never brought this up to me? And I'll tell you why they haven't brought it up to you. Because your accountant was trained in a Canadian school and they were taught how to make financial documents and file those financial documents to the CRA. They were not taught this. This is not taught in accounting schools. This is essentially exclusive to very few strategic thinkers that are either accountants or lawyers or both. A lot of them will set up corporations to do these sorts of things. I will link to one TikTok influencer here who is a Canadian and US CPA and helps professional athletes and honestly high income earners like entrepreneurs and tech executives optimize their taxes with very similar strategies to this, plus a family trust or a holding co as well. So there are people who do this, but you are going to be paying $5,000 for just one consulting session with these professionals who actually do this. But your standard everyday accountant or lawyer, they don't know these things because they've never been taught to think this way, because they're literally just taught to, what the laws are in Ontario or what the laws are in BC or what the accounting practices are for filing a T2 return. They were not taught how to do international, global, cross-border tax optimization. It's just not taught in schools because this is essentially held in secrecy, kind of in secrecy, by the elite. And that's why things like the Panama Papers have come out and shown that the politicians and really wealthy elites all have companies and holding co's in the British Virgin Islands, and how I take inspiration from our great leader, Mark Carney, on how he, with Brookfield, has like 25 different holding corporations in, I think it's I forget what country it is, but it's somewhere down in the Caribbean islands. And he's doing this because he is not paying taxes. But this is the thing. This is legal. This is completely legal to do. It's a way to optimize your taxes. And this is what the wealthy and the elites do. Now, this is on a very small scale, right? I'm just trying to help you go from paying, 30 to 60% of your income to the government to, essentially less than 15%. So that's step one. But step two is going to be following Money with Mark on YouTube to get more wealth and financial strategies and tips and learning how to grow your business that is life-giving, not soul-sucking. But you might be wondering, well, Mark, how do I actually go about opening up a Delaware or Wyoming LLC? Well, very simple. Here's the few things that you need to use as a Canadian entrepreneur with a Delaware or Wyoming LLC in order to set up a Stripe account, to start collecting payments online, to open up a PayPal account, to open up US bank accounts, to do all the things that you need to do as an entrepreneur. This is what you need. You need an EIN number. You need a US mailing address. You need an operating agreement. You need to file annual tax returns. Yes, that's right. You don't pay any corporate tax as an LLC because they're considered pass-through entities. So essentially, wherever those profits are sent, that entity, you as the Canadian or foreign person, have to report that on your personal income. But you still have to file your actual return, which means you need bookkeeping as well. So you actually need to keep track of all of your expenses and make those filing annual returns as well. You also have annual state and LLC registration, which then, if you have all this stuff, you will then be allowed to open up US bank accounts and also have other things like a US phone number is something you need as well to open up your US bank accounts. I recommend Relay Financial. I will include a link to that in the description for your US bank account. But you still need to do all these things, right? So you are sitting there wondering, what am I going to do? Start like Googling like lawyers or like LLC formation in the US. Don't do that, because I've been researching this for over 3 years and I have found the best solution. Now, most places, whether they're a lawyer or an accountant, they are going to come to you and say, hey, we will open up your Delaware LLC for you. And essentially all they're going to do is, do your annual registration within the state and your LLC registration. And that's it. They're kind of like hands off after that. That's not ideal. And they're still going to charge you like $2,000 to do that. What I found is a Y Combinator startup company called Doola. And Doola is incredible because they do what all the other alternatives do not do. They provide you an EIN number. They provide you with a USA mailing address, which you need. They also provide you with the operating agreement. They also provide you with bookkeeping. They also will file your annual tax returns, and they guarantee that it is 100% total compliance if you go with their business in a box package. And that's what I did. It honestly only costs I think it's like $3,000 roughly for the entire year. And that includes all of this. That includes your annual state registration and fees. It includes bookkeeping. It includes your annual tax return, your operating agreement, a mailing address, an EIN number. You get all of this at one shop. And that's why I recommend using Doola. It's what I use to create my Wyoming LLC. And I will include a link to Doola down in the description below. Please use it. It is an affiliate link because it does help support my channel and my content here. So that's your setup there. You basically need 3 softwares. You need to use Doola. You need to use Relay Financial as a banking solution. And then you need an open phone number. And open phone is just like a voice over internet protocol, a VoIP system, but it allows you to open up a US phone number, which you can then use to open up your Stripe account or Relay Financial or whatever you need to do. So that's it. 3 softwares, Doola, Relay Financial, and open phone. That is your key to reducing your taxes to nearly 0%. So now I want to know from you, are you going to open up a tax sheltered US LLC or pass-through entity? Are you going to do it? Let me know in the comments down below. And as always, I'll see you in the next video. Peace out.